I still can't see why this would not be transitory. I can't see why it would continue on.
See, well, here's what I actually think is going to happen. I think that the next recession that we have in America is going to be triggered by inflation. I think it's going to be rising prices that causes Americans to cut back on their spending, right? Even if they're spending more money, they're spending more money on less stuff.
I agree.
Right? Because they're just paying higher prices. And so if I'm spending more money on food, if I'm spending more money on energy, on insurance, on maintenance, on healthcare, on stuff like that, I have less money for discretionary spending. And that's where you're going to see big layoffs, right? A lot of businesses that make a living off discretionary spending, they're going to be going out of business. In addition, a lot of companies that are going to see big increases in their costs, they're going to try to offset that. And one way is going to be by reducing headcount.
Of course.
So I think you're going to see a pickup in unemployment and a recession that's actually caused by inflation. So now you have inflation going up, but you have a weak economy. Now, what is the Fed going to do? They have to make a choice, right? Do they want to try to stimulate the economy or fight inflation? Well, clearly they're going to go for stimulate the economy. So what they're going to be doing is effectively pouring gasoline on a fire. They're going to start printing more money even as inflation is accelerating. And so that is going to cause the stampede out of the dollar to accelerate as people start to see that the Fed is stepping on the gas, not the brakes, right, with inflation. And, you know, and the weaker the economy gets, the more money the Fed's going to print. The more money they print, the higher the inflation. The higher the inflation, the weaker the economy. So it becomes a self-perpetuating spiral. As inflation weakens the U.S. economy, the Fed prints more money to try to soften the blow or stimulate the economy, which makes the inflation problem worse, which hurts the economy even more. So there's just, I don't see how we get out of this. I mean, the way we got out of it the last time was because we did taper a bit. I mean, they shrunk the balance sheet from $3.5 trillion down to 2.8 or something like that. But they're not going to be able to shrink it from 10 or 15, wherever, to, you know, at all. And they were able to get interest rates from 0 back up to 2. They're not going to be able to do that again because we have so much more debt. But also, remember, the Fed was able to fool the markets. The big part about the attempt to normalize interest rates or the attempt to shrink the balance sheet was the fact that the Fed was telegraphing its intentions to the market. And the markets believed the Fed. They believed the Fed was going to shrink the balance sheet. They believed the Fed was going to normalize interest rates. And so the dollar rose based on those beliefs. And that helped keep everything going. But nobody is going to be dumb enough to believe the Fed's lies again. I mean, I was warning that the Fed was lying the last time. People didn't believe me. But I think this time they're more likely to believe people like me than the Fed, because who's going to believe that the Fed is ever going to be able to shrink this balance sheet if they couldn't shrink the smaller one, or they're ever going to normalize rates now? And in fact, I don't even think they're even going to try to bluff it. They're just going to assume or pretend that we can keep interest rates here forever. We can print all the money we want. And so I don't see the stop that you're looking for, that's going to turn this off. You know, now, the only thing in my mind that may force the government to do the right thing would be a real dollar and sovereign debt crisis, you know, Argentina style. I mean, if we really start to see the dollar crashing, you know, going down 5-10% overnight, you know, acting like the peso, right? Or something like that, right? We really see the dollar tanking. We start to see like the price of gold going up several $100, $500, maybe $1,000 in a day, or, you know, a few. We start to see a real crisis. You can't give away U.S. Treasury bonds, right? The yield, you know, then maybe they'll have to, you know, do the right thing. But I mean, the consequences there are going to be horrific of doing the right thing.
So
but the consequences of not doing the right thing are even more horrific.
got it. So in terms of, let's say, I'm just trying to see what you're seeing that would cause that. So maybe the treasuries in China, so you got $1 trillion there, Japan's got $1 trillion, the UK's got $500 billion. Are you maybe alluding to maybe those countries dumping their treasuries? I mean, what are you seeing that's going to weaken the dollar so much, apart from what we've already discussed?
Well, remember, we have these record trade deficits. So we're flooding the world with dollars now that they don't need. And so the only reason the dollar isn't crashing is because people are investing those dollars in U.S. assets. But once they lose confidence in the future value of the dollar, then they won't want those assets. And so there's no buyers for dollars. And yes, I do think that the world is going to look to get out of not only U.S. treasuries, but all debt denominated in the U.S. currency. Mm-hmm. And remember, I think what the Fed is going to do is, right now the Fed is monetizing government debt, right? Mortgages, government bonds. But as the world wants out of US dollars, you're going to start to see those credit spreads really blowing out, because you're going to see big increases in corporate yields, in municipal bonds. And I think the Fed is going to respond to that by expanding its QE program to include more municipal bonds and corporate bonds, because it doesn't want corporate rates to go up. But the only way to stop them from going up is if the Fed becomes the lender and the buyer of these bonds. But in order to do that, they have to print even more money that nobody wants.
Yeah, that's the paradox.
So, you know, we've backed ourselves into a corner. There is no way out of it but a dollar crisis. And that's not really a way out of it. That's just having to confront it, as opposed to kicking the can down the road, which we've been doing. But because we've kicked the can down the road for so long, we have postponed having to deal with the underlying consequences, or not the consequences, the underlying problems of our economy, of our dysfunctional, misallocated bubble economy. Mm-hmm. And so all of those fundamental problems are much bigger because it's been so long, and we haven't had to, restructure.
Yeah. So, okay, let's get on to the what you're talking about with the interest rate rises. So I believe, and correct me if I'm wrong, your opinion is the Fed aren't going to raise the interest rates because they will kill and destroy this recovery that they've created through QE and other things. But
right, it's not a recovery. Remember, it's a bubble. So they'll prick their own bubble by raising rates, and they don't want to prick the bubble.
Yeah, I'm talking about the recovery in terms of how the public is seeing it. I'm not talking from
right. The public thinks we're recovering, but the reality is we're sicker than ever. We haven't recovered from anything at all.
Yeah. So what do you see as the tipping point? What is the tipping point that Peter Schiff would change his mind on the Fed not raising interest rates? Is it 5% inflation, 10%, 20%, 50%? What is the tipping point in your mind?
Well, I said the tipping point is going to be a crisis where the political consequences of not acting may appear worse than the political consequences of acting. I mean, right now, nobody wants to raise interest rates and crash the stock market, crash the real estate market, just keep on printing money, everything is fine. But when we come to a point where everything is not fine because the dollar is collapsing and prices are surging, and maybe the stock market is going down anyway, or because everything is so bad, they may feel that, okay, it's already horrible, we might as well do what we need to do because we're probably not going to get reelected anyway. But things are going to get really bad. But that is going to happen.